Hey everyone, it's Andy again, and I have another video for you. I'm sure you're excited. Um, I wanted to send out this information because I know everybody is anxious to get their PPP loan applications in for this second round of PPP. And I wanted to walk through a scenario where it might make sense to wait a little bit. There's going to be a lot of information in here, so I hope you bear with me. But just wanted to give potentially a reason why it might make sense to wait to actually apply for the second round of PPP. So let's take a look. So in general, we've talked about the PPP. We've also talked about the employee retention credit. So I'm going to back up a little bit and talk a little bit about the employee retention credit for 2020. And you might remember way back when the first round of PPP came out, there was also this other option, which was the employee retention credit. At the time, it was in either or. You either could take the employee retention credit or you could take the PPP. And you might even remember way back then in March, April, I actually put together a video about trying to decide between the two. Most people, almost all people, chose the PPP just because it was a better option and the money came sooner. But they have changed the rules with the latest legislation, and it's not an either or anymore. You can take the employee retention credit even if you've got the PPP loan. So I want to take a step back and talk about the employee retention credit really quickly. So uh, basically, the employee retention credit allows you to take a credit against wages paid to employees during an eligible period. Um, so let's talk about what an eligible period is for 2020 at least. So if you're had a period where your operations were either fully or partially suspended by COVID-19 governmental order, then that qualifies. So for some people, that'll be obvious if you're a restaurant that has been either fully or partially shut down. If you're a fitness center that's been either fully or partially shut down, the period when you have been shut down qualifies as an eligible period. Um, Keep in mind that is a governmental order, so if you shut down voluntarily, that doesn't count. But as soon as the state or local government said you can't be fully open anymore, that qualifies. Um, we won't get into too many details of that because really the second one is the one I want to focus on, which is the gross receipts test. So if you qualify under either of these, it counts as an eligible period. So the or here is if you had a quarter where your gross receipts were less than 50% compared to the same quarter in 2019. So remember, this is 2020 compared to 2019. So quarter two, the end of quarter one, obviously, is when everything hit. Quarter two, for most people, is going to be the biggest drop. Maybe quarter three or quarter four. But if you had a quarter, let's say quarter two dropped by more than 50%, then quarter two would qualify. Um, and you continue to qualify. You continue to have eligible periods until the end of a quarter where your gross receipts are more than 80% of the prior year. So I'm going to go through a couple examples of that, exactly what that means. Hopefully that'll help. So let's just say that in quarter two, your revenue was down 60%. So that's more than 50%. So quarter two would allow you to be eligible. And then in quarter three, you had a little bit of a comeback and your revenue was down only 35%. Remember, that next threshold is at the 80% of the prior year. So you're still, what's that, 65%? So quarter three still qualifies. Quarter four, suddenly you've got a little bit more revenue and you're only down 15%. That's more than that 80% threshold of the prior year. So you would still be eligible for quarter four, but then quarter one of 2021, theoretically, you would not be eligible anymore. So in this scenario, you would be eligible for quarter 2, quarter 3, quarter 4 to take the employee retention credit. The next example, let's just say that quarter 2 you didn't experience as big a drop, only down 40%, so that is not a eligible quarter. But then in quarter 3, you exceeded that 50% mark, and now you're eligible for quarter 3, and then in quarter 4 you're back up, but you're still eligible for the end through the end of the quarter because that was the quarter that you got back above 80%. So in this scenario, quarter 3 and quarter 4 would both qualify. And then, another quick example, quarter 2, you were down by 60%, so you qualify in quarter 2, back up in quarter 3, but you're over that 80%. So at the end of quarter 3, you stop being eligible for the credit. So really what you want to look at your quarter by quarter revenue comparing 2020 to 2019 to try to figure out which quarters you might be eligible for this employee retention credit. Another, quick little example, I talked about shutdown. Let's just say you didn't have any quarters where your revenue was down by 40% or 50%. That's when you're going to want to look at whether you were shut down or not. Let's just assume that on August 1st, you got the orders that you had to close your doors. And then on December 10th, you were able to reopen again. I don't know anybody who actually had that scenario, but let's just assume it's August 1st or December 10th. In that case, you're not looking at quarters where you're eligible. You're looking at actual dates that you're eligible. So any wages that you paid between that August 1st and December 10th qualify for this credit. Every business is going to be different here. If you need help figuring out these numbers, then just let us know. We can try to help you figure out if you're eligible in any quarter for 2020. So you go through that process and you determine you're eligible. So what does that mean? So the credit, the employee retention credit, is a credit of 50% of the wages that you paid during that eligible period. The maximum amount of credit that you can take per employee for any one individual employee is $5,000. So $10,000 of wages is a $5,000 credit. That's when that employee maxes out. So here's, how the interplay with employee retention credit and the PPP. If you used PPP money to pay the wages, you can't take the credit. So there is going to be a calculation of what PPP money was used to pay which wages, and you can't then also claim the credit. So there is a little bit of work to be done there. What this means for you, though, is if you did get the PPP, you weren't claiming this credit in 2020, so you might need to or want to amend your 2020 payroll tax filings to get this credit that you are now eligible for. So for most businesses, it means if you haven't filed your PPP forgiveness yet, don't do it yet, because once you claim wages on your PPP forgiveness, then you might be giving up some of your eligibility for an employee retention credit. So hold off on those PPP filing or forgiveness filings. And also, it's probably worth the effort to figure out if you're eligible for this credit, and if so, how much you might be looking at to determine if you want to go back and amend your payroll tax filings. So that's all 2020. We still haven't got to answer the question that I brought up in the beginning, is should you apply for the next round of PPP? Sorry, one thing I want to do before that is just do a quick little example of what that might be worth under a given example. So let's just assume that you determined that you qualified for the employee retention credit for the third and fourth quarter of 2020, and you paid 3 employees. One of them you paid in quarter 3, you paid employee 1 $4,000, employee 2 $6,000, employee 3 $12,000. Same amounts you paid them in quarter 4. Do a little bit of math. The total credit that you're eligible for is $14,000. So this is an example with 3 employees and it's a decent credit that we're talking about. Um, the this assumes that you've determined that you used up all your PPP before quarter three, so that you're not having to reduce it for that. Once again, there's going to be some work done to try to figure that out, but just a quick little example to say how much this could be worth. And the way we think it's going to work for 2020 at least is, since most of the quarterly filings for 2020 have already been completed, is to amend those quarterly filings to now claim the credit. It might come out that there's going to be a simplified solution for going backwards, but at this point it looks like that's going to be the solution. So we'll look into that. So let's talk about why it might make sense then going forward to wait to apply for the next round of PPP. So this employee retention credit continues at least for the first 2 quarters of 2021. So quarter 1, quarter 2 of 2021, you can still claim this employee retention credit. And not only that, they've made some changes to the credit itself. What was a 50% credit is now 70%. And what was a $10,000 per employee wage cap, still a wage cap, but it's now per quarter instead of per year. So in 2020, if you had an employee who made, $20,000 per quarter, you could only claim a $5,000 credit for them because you're capped. Now every quarter you can get a $7,000 credit because it's 70% of $10,000, at least for the first 2 quarters. So that's a much better benefit if you have, higher earning employees. Also, the revenue reduction that we talked about, instead of being 50%, it's now 20%. And just to be clear, you're comparing the first quarter of 2021 to the first quarter of 2019. So you're going back 2 years to compare. You're not comparing it to 2020 because they know that was probably a down year. So if quarter 1 2021 is at least a 20% drop compared to the first quarter of 2019, then you qualify in the first quarter. Same thing for the second quarter. And then there's a slight wrinkle that they've allowed the option to actually look at, if you don't, if you're not sure, or if you don't have a drop in 2021 compared to 2019, you can look at the preceding quarter. So in quarter 1, for instance, it would be the fourth quarter of 2020, which is just finished. So you should know those numbers. So if the fourth quarter of 2020 had a drop of 20%, then the first quarter of 2021 now qualifies. It might not, the fourth quarter of 2020 might not qualify if you didn't have, previous 50% drop, but at least the first quarter of 2021 now does. So you kind of know in advance if you're going to qualify for the quarter, because you know what the previous quarter was. So once again, a lot of percentages, a lot of numbers there. Let us know if you need help figuring out, are you currently eligible for the employee retention credit? So they've made those changes to make the credit much more valuable. I have this same example with the same numbers that I used for the 2020 numbers, but now using the 2021 rules in the first and second quarter. And those same wage amounts, those same number of employees, what was a $14,000 credit is now a $28,000 credit. So, double in this case. It's not always going to be like that, but for this particular scenario, we're talking about $28,000 compared to 14 last year. But here's where we get to start answering that question that I asked at the beginning, which is we have to remember that if we use the PPP to pay these wages, we cannot claim the credit. So the timing of when you apply for the PPP is going to affect your employee retention credit. If you apply as soon as it's ready, which is in the next couple of days, your 24-week clock starts ticking. So that means that you have to use the money to pay wages and other expenses within 24 weeks of receiving the money in order to get full forgiveness. So if you start using the money right away to pay wages, then you stop being able to claim the employee retention credit. So the question is, are you in a position where you can wait to take the PPP and maximize your employee retention credit first, and then take the PPP and use the money? Because remember, the employee retention credit only goes through the second quarter of 2021. Now the PPP loan applications end March 31st of 2021. So, it's going to be hard to exactly maximize things, but the longer you can wait to get that PPP, the better it is going to be for you on the employee retention credit. Now I know the hard part is that getting the money from the employee retention credit takes a little longer. The PPP, especially the first round, that money came pretty quickly. Kind of as soon as you applied for it, that money was in your bank account almost immediately. With the employee retention credit, it is a credit on your payroll taxes, but you can request an advance of that employee retention credit. But it still takes time because you have to request the advance from the IRS and you have to wait for them to then send you the money. I actually don't know how long it would take for them to do that. I haven't experienced that, but one little wrinkle new to this year is that, so in the past for 2020, you could apply for an advance, but it had to be based on wages that you already paid. So let's say you were going to be eligible, you were eligible for the fourth quarter. You paid wages of $10,000, so you knew you were going to get a $5,000 credit. You could request an advance of $5,000 after paying those wages. Now what they're going to allow you to do at the beginning of the quarter is you can use your average quarterly wages you paid during 2019 and request an advance of up to 70% of that. So if you paid $100,000 in wages quarterly in 2019, you can request an advance of $70,000 right now. And then at the end of the quarter, things will be trued up. If it turns out that you aren't eligible for that much of a credit, you have to pay some of that back. If it turns out you're eligible for more, then you get more. But it does allow you to get a bigger advance up front, take some of that money up front, so that you're not waiting until after the end of the quarter to get the money. So keep that in mind. It still is going to take a little longer than the PPP money. So in my mind, the two reasons really you might want to do the PPP now and not wait is if you're worried that the money's going to run out. I personally don't have that fear. It does seem like with the limitations they put on the PPP this time and the amount of money that's allocated, I do think that the money is going to last through the end of March when the applications close. I don't know that for sure though, so I wouldn't tell you not to apply and then have the money run out. So that would be one reason to potentially do it now. The other reason to do it now, obviously, is if you need the money right now. If you can't wait a couple weeks or you need the money in your bank account immediately, then you might be giving up some employee retention credit, but maybe that doesn't matter to you because you need the money now. So those would be another, two reasons why you might apply right away. But beyond that, you definitely want to take a look at whether or not an employee retention credit makes more sense right now. So once again, feel free to reach out. If you have questions, send me an email, give me a call. We can do some analysis for you to determine, one, if you're qualified for the employee retention credit and to how much. Some of it's going to take a little bit of work. Some of it depends on how good your the accounting is. But definitely, if you're curious, reach out and let us know. Thanks.